All right, so we've got a sharp sell-off in Bitcoin. I told you guys to buy puts if it hit it that 75,000 level. I told you to buy that for Feb 20. Told you to do that around the first week of Feb, last week of Jan, and it looks like that thesis was correct. So I did buy puts. Those puts are printing right now. So let's take a look. Okay, so if we scale back, we'll notice that go over here to Jan. Let's just kind of zoom up on that. We probably need to take off one of these. Take this one off. Now, if we notice, we got a really tall red spike right here. So volume's picking up on the sell, right? Negative volume on the sell. If we come back here to October, we see we were at 124 or 120,000 back in October, right? It grinded down all the way to 83 in November, and it held that support for a while, trying to pop back up. But around this level, I said, okay, go ahead and buy puts. Go ahead and go bearish, because once this broke, that was sort of a, you had a red sell-off here, a bounce back, a red sell-off again, a bounce back, a red sell-off again. So these red candles were flashing for you. It held pretty good. And so what you really wanted to see was a retracement back to that with green candles in the volume. But what you got instead was lower volume, lower volume, lower volume, lower volume, and then higher volume to the sell side. And that's when we broke that level. I think I mentioned in my video about a week ago that if it breaks 75, which it did, go ahead and get puts. Literally broke that the first day of Feb, or I should say the first week of Feb. So overall, Bitcoin it's in a classic macro catalyst plus technical compression setup, right? It's in a strong sell category right now. Price has slipped back under the $66,000 support area, failing to breach the 70K handle with the wide intraday swing that underscores elevated volatility and fragile conviction. Okay. The high was 69, the low is 65. Technically, it's a short horizon momentum that has deteriorated. Investing.com's 14-day RSI reading sits in the low 30s, a sell regime, alongside a negative MACD, moving average conversion divergence, and a bearish 5-day moving average signal. Conditions consistent with downward pressure and a failed bounce. Risk if buyers cannot reclaim the short-term trend. The immediate battlefield is simple. 70K is the overhead resistance where recent attempts have stalled, while 65K is a psychological support zone, which I think we're going to blow right through on the downside. I'm thinking this could go down to 20K or lower by the end of the year. That's my prediction. Could be wrong, could bounce back, but we'll see. I think it's going to go below 20 or going to somewhere around 20. That said, the oversold readings can also set up a sharp snapback when macro liquidity steps in, which is why the next leg likely hinges less on the crypto narratives and more on the rates, inflation expectations, right? Fed rates, that type of thing. Bitcoin used to be thought of as a fiat hedge, a hedge against inflation. I don't think that's the case anymore. I think precious metals are the hedge against inflation. I think Bitcoin is more of a speculative asset at this point. It's not going to perform well just because inflation is going to go up, especially because there's so many other cryptos out there right now, especially stable coins, right? If you look at USDC, let's take a look at USDC, which is a stable coin. If we look, we will see that USDC is stable, right? It's been trending around the $70 level, still at that $70 level. It hasn't really broken because it's pegged to the dollar. So Bitcoin cannot really perform well when you have so many new innovative cryptos coming out, right? New flows reinforce this. Multiple outlets, right, are framing the current action as a consolidation chop while markets wait on a major U.S. Job and CPI. We just had jobs numbers come out. They were revised. I don't really trust those job numbers, but in any case, gold is doing well right now. If you look at gold, let's look at GLD. Gold is doing fine. Gold is doing really fine. Let's take a look at the candles. Just run the line. Right? If we look at gold, sort of peaked. They had a sharp dealer correction here, and it's retracing. So it's going to get back up to that all-time high in the near future. It might happen in the next, 2 weeks, 4 weeks. We don't know, but it's going to get back to those all-time highs for sure. Take a look at SLV, silver. Right? Silver also had a sharp correction here. It's trying to retrace those steps, having a little bit of issue, dealer sell-offs, but I think it could get there maybe in the next, it tends to move with gold. So it could probably get there in the next 4 to 6 weeks as well. We'll have to wait and see. Now the thing about silver and gold is, when the dealers did this sharp sell-off here, this engineered sell-off, what happened was they gave up a lot of contracts for cheap to sovereign buyers, wealth funds, right? So what happens is they don't want to keep crashing the price too much because they're going to keep giving away physical. What happens is they sell these paper contracts at a low price. It gets snapped up, and then they take delivery on those metals, right? They convert those paper into physical, which drains the vaults, and that's what's happening right now, which is why you're not seeing them continually press down on those these sell orders. They're trying to cap it so it doesn't ride back up, but they're also not continuing that deep sell-off that they were doing earlier, right? That's why it's not getting back down to 66. It's not getting back down below 70s easy. Right now you can see it's already retracing 76, which I check, that means that just checking silver. or actually not 76. It should be 80. Sorry, I'm looking at this. So if we want, let's take a look at the actual futures. All right, silver futures. Yeah. So in terms of per ounce, we're at 84 an ounce, right? So basically, what's happening is they sold it off here. It bounced back. They did another crash here. Bounced back. They did another crash here. It's bouncing back, and they cannot keep crashing it at this point because every time they do, they're just giving away delivery of their vaults, right? People are normally what happens is they engineer these sell-offs. People don't buy up the contracts as much. The price goes down. It stays down. What they're finding now is that they're getting their vaults drained quicker and quicker, right? More and more people are buying these contracts and taking delivery. That causes them to have a pretty big problem. If they let it run back up, they lose on paper contracts. They smash back down, they lose on physical delivery. So they're trying to keep it in a nice range, but it's probably going to keep grinding up slowly. It might not until it snaps up again, right? It might not snap up right now, but it's going to grind up slowly and slowly until the inflection point hits. And at that point, it's going to snap back up, right? Now, just to close this out, let's take a look at some more crypto. Let's take a look at Ethereum. You can see Ethereum's having a pretty sharp sell-off as well. The last time it was at this level was, looks like May, right? So already we are at 20 May 2025, and then it was there at October 23, and then again at March 21. So, you know, it kind of spiked, it went down, held, spiked, went back down, spiked again, held. Now, at this spike, the question is, do we expect it to pop back up, or do we expect it to go back down? I actually expect it to go back down. It's going to probably retrace these levels here. So I'm expecting it to get down to, let's say, 1,000, 1,200, something like that, 1,300. I could see it getting there this year. Why not? I mean, when it spiked here, it crashed all the way back down to 1,000. So there's no reason why this spike can't get you all the way back down to 1,000 as well. In fact, it's more likely than not. It's much harder to bounce back than it is to keep falling. Let's take a look at Sol. All right, let's take a look here. You notice that we're at 184. Our high was 255. Previously, it was at 25. So where do we think it's going to go? It could get down to 73 this year. It's not impossible, especially considering that it was already at 105 not too long ago, and it looks like March. So that's my prediction for the crypto market. I would, if I were you, I would buy more puts. You know, some long dated puts. You can try to do short dated, but the shortest I would go would be March, and you know, go long on precious metals, gold, silver, copper, those sorts of things. So that's my update. I'll keep you posted on price action.